Good afternoon, everyone, and welcome to our webinar. My name is Ria Aguinaldo. I am the Northern California Outreach Manager with Small Business Majority, and we're so happy to bring this webinar to you today. It is called Access to Capital and Business Credit 101. We're pleased to have a partner on this webinar today. It is with NAV, and we're going to focus later in the presentation on business credit, which is for us at Small Business Majority a topic that we've heard time and time again from business owners on what business credit is, what do you need to know about it as a small business owner, how do you use it to build and grow your business. So I'm happy to hand it over towards the second half of our webinar today to Gerri Detweiler, who is the Head of Market Education for NAV. And she will tell us more about NAV as well as sort of nuts and bolts of business credit and what small business owners need to know on building their credit. This presentation with Small Business Majority is sponsored by the Sam's Club Giving Program. We have been doing this webinar on Access to Capital 101 for about a year. We do host this on a bi-weekly basis every other Wednesday at 2 p.m. Eastern. So if for any reason you have to drop off, or if you are interested in joining another one of our sessions, just note that this is a recurring webinar. And we really do our best in trying to invite partners, nonprofits, private, public sector partners to bring information around access to capital, around financial literacy onto this webinar to make sure that we're staying relevant and bringing much needed information to small business owners across the country. So a couple of housekeeping items before we get started. We did email a copy of the slide deck out about half an hour ago to you, so if you're interested in following along on the slide deck, it is available for download in that email. And we also will send it at the end of the presentation. When this wraps, we'll send another email with that attachment as well. This session is also being recorded, so we'll make that available to you as well. And we will take question and answer questions at the end of the presentation through our Q&A. So feel free to type your questions into the chat box in the lower left-hand corner of your screen, and we will take those at the end. All lines, phone lines will be muted. So just a note, if you do have any questions, those will have to be submitted in the chat box. All right. Now just a quick background about who we are at Small Business Majority. We are a small business education and advocacy organization. We were founded and run by small business owners, and we celebrated our 10-year anniversary last year. We have offices across the country. I am based in our headquarter office in the Bay Area, California. But in all of our offices across the country, we have outreach managers that focus on the local landscape of small businesses, work with small business owners directly, work with business organizations to learn the local resource providers that are out there that are providing the one-on-one business assistance to business owners, and also to learn about how we can use our sort of national platform to help businesses locally. So we do a great deal of education. This webinar is part of our entrepreneurship program, which focuses on bringing education to business owners in key areas of running and growing a small business. Our small business resource portal, which is linked on the screen here, that is our sort of one-stop shop for everything entrepreneurship program. It has a running list of all of the webinars that we host. It has all of the events, both in person and online, that we host. And it also has more in-depth information on all of the topics that we cover. So through that portal, you can find more on some of the funding options that we might not cover today, more resources, and also it has a list of all of our business technical assistance and lender partners. In addition to our entrepreneurship program, a big bucket focus of what we do here at Small Business Majority is advocacy and policy work. So we do a great deal of research to figure out what the top line issues of importance are to small business, and we advocate for those issues at both local, statewide, and national level to make sure that we can level the playing field for small businesses and you all can continue to grow our economy from the ground up. This is an infographic of our model. So as I mentioned, research, advocacy, and education are three big components of what we do. And the last one here that I want to mention is our network as well. So we are very focused on inviting small business owners into our network to get involved. So through the advocacy that we do, we want to make sure that through small business owners, we provide opportunities for small businesses and entrepreneurs to tell their stories to the media. If there are certain issues that you feel strongly about and you've heard a sort of narrative in the media that perhaps you might not agree with, we are constantly looking for those opportunities to connect small businesses to represent themselves. You know, we're very focused on advocacy, and we as an organization representing small business, but the more we can connect actual real business owners and real stories to those opportunities, I think that for us is more powerful and more impactful in the long run. Now, moving into my portion of the presentation, we will now jump into the topics of discussion. So as I mentioned, we do have a partner on this webinar. It is with Gerri Detweiler at NAV, who will be talking about how to build business credit and grow your business. And before we hand it over to Gerri, I will give the Access to Capital 101 portion of our discussion. We'll start off with some background and research on why we're here talking about access to capital, what are the main challenges facing small business owners. I'll touch on key questions to ask when seeking funding. For us, access to capital has always been and continues to be the one top line issue that business owners are challenged with and are constantly seeking more information and more guidance on. So hopefully these questions will help to address some of those challenges and move you more in a position to obtain the funding that you need to grow your business. And then I will spend most of my time talking about the funding landscape. So what we find ourselves in now is a time in which alternative financing options have stepped into the small business financing space, and these are options that are beyond the big banks. So what else is out there beyond just the traditional banks that can help to connect you, that can help to bring you that capital that you need? And then I will talk about our Small Business Borrowers Bill of Rights, which addresses predatory lending issues that we are seeing now, particularly in online lending around small business financing. All right, so now we'll jump into the background and the research. And as I mentioned again, I will just say it again, we are taking questions at the end of the presentation, so feel free to type your questions in the chat box in the lower left-hand corner of your screen. All right, now what are the issues around access to capital, and why is it such a challenge for small business owners that are looking for funding? So we conducted a scientific poll that found out that 90% of small businesses say that the availability of credit is a problem. This was really a driving factor in terms of our work around this issue. That's the sort of impetus to creating this presentation. We wanted to find a better way to connect small business owners with that much needed education. A couple of important points to note about access to capital. the availability of capital has always been and will always be crucial for small businesses in the startup, survival, and the growth. Inadequate capital continues to be an issue facing small businesses, and a couple of the reasons why that I will touch on here are due to the sort of a shift in the small business lending environment. So small business bank lending has been down 20% since before the Great Recession, and that is for a very long time the mainstay of the traditional mainstay of how small businesses were funded. So it wasn't more than 20 years ago. You could walk into your local bank, fill out a bank loan application, and within a couple of weeks to a month, you would get that loan approval and use that towards your business. Unfortunately, times have changed, and while that need still remains, the ways of getting capital are very different now. A couple of other reasons that I will touch on that exacerbate that challenge is banks are now more risk averse. So there are now more strict underwriting standards in terms of what constitutes a credit-worthy borrower. Small business loans are inherently more risky than large business loans. So for example, when a bank is looking at which loan would provide a higher return on investment, and they would look at a small dollar loan from a small business, say for less than $250,000. Most small businesses that we work with are looking for sort of micro loans, so the ballpark of $50,000, between $50,000 and $200,000. So when a bank is looking at those smaller dollar value loans versus the $1 million and above loans, which one of those loans will give them the higher return? What we're seeing now is that banks will now completely take off. Oftentimes will take off those lower dollar loans, and many of them will not even make smaller dollar value loans under that $250,000. So that's why we're seeing the shift towards higher dollar value loans, and so that the challenge of small businesses finding the loans that they need in that smaller loan size has been a big issue here. And also the consolidation of community banks as well. For many years, community banks and credit unions have long been allies for small businesses, but we have seen that after the Great Recession, we've seen many of the smaller neighborhood community bank loans sort of go away due to the consolidation of those community banks and the acquisition of them as well from bigger banks. And then all of that to say, regarding the environment and sort of the regulatory issues around that, small businesses were also hit hard by the Great Recession. So many suffered now from devalued collateral, damaged credit scores, and in today's lending standards, making them less creditworthy. So that's for us one of the key points that we acknowledge, and also why we realize there are a number of alternative lenders that have stepped into the space that offer options to small business owners and small business borrowers that are less creditworthy. And certainly we'll talk more about that credit, personal and business credit later in the presentation with Gerri. All right. Now the good news is there are now more funding options available than ever before to help you start and grow your business. Here is a snapshot of some of the sources of funding that are available to small business owners. This is a list that is not exhaustive, as there are other options, but we wanted to give you an idea of what's out there. So we won't cover all of the options in our time together. We abbreviated this presentation to fit within the hour, but I'm sure many of these options you've heard of or you currently use to fund your business. So family and friends, personal and business credit cards. As I mentioned, community banks and credit unions are great options for small business owners because much of the decisions that they make in their bank, they factor in your impact as a business in the local community as sort of a driver of local economic development. So community banks are definitely a great option for small businesses. And then there are other options like grants, startup programs, business plan competitions that are worth mentioning as well. We do have more information on some of the options here, again, on our small business portal. It's smallbusinessportal.org. All right. Now, some key questions to consider before we jump into talking about some specific funding options. It's very, very important to do a critical evaluation of your business's financial situation. So taking the first steps to ask yourself these very important questions and assessing your business's financial situation and its financial health will help to better bring you towards the funding option that would work best for your business. So, how much money do you actually need? What do you need it for? How quickly do you need the funding? Are you seeking debt or equity financing? So I won't go in depth into each of these questions, but it's just important to note that what we found is oftentimes if you take the time to answer these questions and work with a business counselor or a business coach to help you walk through these questions, oftentimes you'll find that financing or a loan may not be what you actually need. It might be that you need cash flow management assistance, or you need help in sort of figuring out whether or not you're looking for working capital, or if there's sort of some issue in your operations that could be sort of leading more towards that issue of the need for more funds. So on that note, I just wanted to also plug a great resource here for technical assistance. All across the country, there are technical assistance providers like small business development centers, SCORE chapters, and these are all organizations that provide free services, free business coaching assistance to help you answer these very important questions. And they also offer workshops and more resources and education as well. All right. Now moving into the funding options that we'll talk about today. First, we'll start off with community development financial institutions, which are often referred to as CDFIs. Now, one thing to note about CDFIs is while bank lending has been down, CDFIs are really stepping up to fill the void with a focus on the local economy and building local businesses in sort of a holistic way. So what is a CDFI? So a CDFI is organizations. They're a class of financial institution that caters to underserved entrepreneurs that are typically ineligible for traditional bank loans and also focus on low-income communities. These financial institutions are certified by the Treasury Department. They can be banks, they can be credit unions or nonprofits. And the way they function is they focus on specific geographic regions and they raise the capital that they use to lend. So many of the grants that they apply for are through bigger banks that might not offer those loans directly to small businesses. So those banks, those big banks will often provide the grant funding and those loan funds to these nonprofits in order to make those much needed loans to local businesses. They are very focused on revitalizing the local community, as I said. So it's an added benefit to CDFIs is they provide in-depth support in addition to the financing itself. So if you apply for a loan with the CDFI, oftentimes they will require that you attend cash flow management workshops, or they will require that you meet with their business coach once a month to make sure that you're on track. And for many businesses, that is definitely a valuable and added benefit to the loan itself. Also important to note with CDFIs that many of them do offer microloan programs. So if you are looking for loans of less than $50,000, CDFIs can be a good option for you here. All right. Some of the pros and cons of CDFIs for the pros here, these CDFIs do offer competitive rates. They are great if you are unable to secure a bank loan, and again, that added benefit of the business assistance is very valuable. On the con side, if you are looking for a larger dollar value loan, usually above $250,000, many CDFIs will not have the capacity or the funds to offer that value of a loan, so it may not be sufficient for you. And we also do find that personal collateral and guarantees are often required. If you're looking for a CDFI in your region, Opportunity Finance Network is a national membership organization of CDFIs, and they do have a locator tool to help find a CDFI near you. All right. Now moving on to SBA loans. Many of you may have already heard of the SBA loan program, so I'll just quickly go over this this option that's offered through the U.S. Small Business Administration. So it's important to note that with SBA loans, the SBA is not the lender. So the way that the loan guarantee program works through the SBA is they guarantee a portion of the loan to provide incentive for banks to approve loans that are more risky for small business owners. So again, the SBA is not the lender, but they are the guarantor. Their loans cover a wide range of uses, including startups, working capital, inventory. The primary programs are the Advantage Loan and the Grow Loan. Previously, these were known as the 7A and the CDC 504. Now, for most businesses that are looking for working capital and are looking for sort of a traditional loan, most likely you would apply for that Advantage or that 7A loan. That is SBA's sort of bread and butter loan that they offer. And then there also are programs available for microloans and then specific programs for disaster relief and exports and veterans in the military. All right. Now, a couple of important points to note about SBA loans. It's important to note that this is a government-backed loan. So in terms of the application process and the documentation that you'll need, it is quite extensive. So while they do offer very competitive rates and they're very transparent in terms of the loans that you are that you're getting and the terms that you're getting, you will work with an SBA lender to gather that documentation, and it's important to note that when you're working with that lender, please be sure to try to get all that documentation, all of the bank statements, all of the dated sort of financial statements that you need. Try to get that all within the first shot. What we've seen is missing or incomplete information or dated financial statements or bank statements can really hold up your application process, and we've seen those denials because of the lack of sort of thorough, complete application. All right. Now, to find an SBA approved lender near you, there is a link tool offered by the SBA, and also, as I mentioned, there are technical assistance providers that are partly funded by the SBA. That is the Small Business Development Centers, SCORE chapters, and Women's Business Centers. All right. Now moving on to the alternative online lenders. Now this is a very big topic and an important one for small businesses to understand in terms of the new environment of small business lending that we're in today. A new breed of online lenders is disrupting traditional lending. For a very long time, when small businesses could not access those loans, we've seen more of these online lenders step into that space to sort of try to fill that void. These new lenders are offering new added benefits, new sort of value propositions in terms of what they offer. So what you'll see with online lenders is unprecedented speed, ease of use. You'll see quick approval and delivery of funds. Often we'll see delivery of funds within, a couple of hours, certainly within 24 hours, depending on what lender you're working with. And also with the use of technology and the new sources of social data to assess risk. There are new standards and new metrics that these lenders come up with to evaluate creditworthiness. Now it's important to note with all of those kind of new benefits that online lenders offer, it's important to note that online lending is largely unregulated at this point. So what that means is many of the consumer protections that are worked into the financial system and into consumer loans and into current the alternative options that we talked about before this slide, many of those consumer protections are not imposed here in online lending. So we have seen that while there are some responsible online lenders, there are options and lenders that may mask very high rates. They might not be very transparent, and it's often a challenge to differentiate which ones are the good guys and which ones are sort of the more expensive or sort of tricky loans to understand. So please, as we go through this, please note that we urge small businesses to proceed with caution, and it's worth noting here that before applying for or considering an online loan, we highly encourage small businesses to meet with a business coach, a financial advisor, a business technical assistance provider, or visit a CDFI. Just to ensure that they understand what that loan would look like, how much it would cost, and that you aren't getting involved in an option that might end up being very expensive or very sort of detrimental to your business. All right. Now, what I will go ahead and do before I hand it over to Gerri, I'm going to touch on the three types of online lenders here, and I'm going to go through these fairly quickly. Just another wanted to mention again, we do have more in-depth information on online lending and on all of these options on our website. So I go through these pretty quickly. Please feel free to check out our smallbusinessportal.org, and also feel free to reach out to us, of course, as you are considering some of these options. So the first here that I'll touch on is online marketplace lenders. They have for a while been called peer-to-peer lenders, and it's important to note that since this online lending space is fairly new, the terms and the sort of types of lenders that are out there, the names are changing. So they are now called online marketplace lenders, and the way that the funding works for these lenders is these marketplace lenders connect small businesses with institutional and individual investors. So the funding, the financing, and the capital that you are obtaining through these marketplace lenders are being pulled from a marketplace of investors. The capital looks similar to that of a bank loan. It is a term loan similar to a traditional bank loan, 6 multi-year terms, stated APRs. It's important to note also that when we're looking at the interest rates of online lenders, the interest rates are going to be higher than traditional loans and higher than the alternatives that we talked about in the previous slides. These online lenders, we have found that they are focused on transparency and pricing and the overall process. So in terms of fine lines, we found that there are not any sort of not as many sort of surprises or fine lines that you'd have to be concerned with some of these online marketplace lenders. And a few examples of these lenders: Funding Circle, Lending Club, and Prosper. Those are 3 of the leading online marketplace lenders at this point. All right, moving on to online cash flow lenders. Now, a great deal of online lenders have stepped into offering short-term loans that are typically used for working capital. These are short-term options with very high interest rates that we've seen. And for these types of lenders, they will use non-traditional underwriting algorithms to determine your creditworthiness. So what I mean by that is they'll often look at your social data. They'll look at your Facebook, or oftentimes they'll look at your kind of eBay, like merchant accounts, to make sure that your payments are being made on time. So that's sort of the new, with the emergence of sort of the technology piece here, that's how some of these lenders are determining their risk. The loan payments here are made on a daily basis. So loans are made on daily deductions of a fixed amount or a percentage of sales rather than citing the interest rate. And what that means is they require access to your business bank account or your payment systems, and they will take those payments out on a daily basis. So please note that what we find, since this is a new payment structure here, we're not looking at monthly payments. Please be cautious of opaque pricing. We have found that some of these online cash flow lenders are not as transparent as we believe they should be in disclosing what the real sort of cost would be to business owners. So please be aware of high interest rates, and with those daily deductions, the way that is set up can be very damaging to your business in terms of lowering the cash flow that you would have every day. So again, please note that we do urge that you proceed with caution here, as these options do tend to be more expensive. And then the last option that I'll talk about in this section is merchant cash advance. Now, MCA providers have been around for a very long period of time, and to sort of cut to the chase here, MCAs are the payday loans of today for small business owners. So the way that these funds work is these providers are not technically lenders, but they're actually credit card payment processors, and they take out a percentage of credit card sales or debit sales daily until the loan plus a premium is paid back. All right. Now, with that being said, we do have some tips here that we advise if you're looking into merchant cash advances or some of these more kind of expensive online options. We do realize that there are times when a quick infusion of cash is needed. However, merchant cash advances should be a last resort, if even that. MCA providers are not bound by laws that regulate the lenders and limit interest rates, so they often do mask exorbitant rates to close the deal They can be very expensive, and please be cautious of deceptive and aggressive sales practices. And then lastly to note here to close out this online lending section is please carefully review and understand all fees, terms, and penalties. Again, please, if you do find that you are in dire need of funding and you need that quick infusion of cash, we do encourage that you visit a business coach, a technical assistance provider, or a CDFI to help find an option that might be more suitable for you. All right, now just to close out my portion of the presentation, I do want to mention here our Small Business Borrowers Bill of Rights. Now, what we've found, particularly in the online lending space, is since there has been a huge increase in these new online lenders that are providing high-cost, short-term funding options to small businesses, we've seen, since it is highly unregulated, that there has been an increase in predatory lending practices. So we came together with a coalition of marketplace lenders, of responsible lenders, nonprofits, small business advocacy groups, to put together a framework of what we believe small businesses what we believe small businesses deserve in terms of financing. So these are the 6 pillars that we came up with the Responsible Business Lending Coalition to make sure that we can hold lenders accountable for the loans that they provide to small businesses, and to also educate borrowers on what they should be looking out for. Now, we did put together a checklist for small business owners to sort of help protect yourself and to avoid some of these more expensive and non-transparent loans. You can download this checklist on our website at smallbusinessportal.org. But all of this to say that it's important for you to really take a look at your financial situation, make sure that you can reasonably meet the payment terms that are being disclosed here, and also to make sure that all of the terms and the fees are stated. So looking into what will that loan actually cost you over time. And you can use this checklist to actually walk through your options with your lender. So that's another use that we've seen for this as well. All right. Now, if you're interested in learning more about the Small Business Borrowers Bill of Rights, we have a website, responsiblebusinesslending.org, and these are some of the organizations that we worked with to put together the Small Business Borrower Bill of Rights. This is the Responsible Business Lending Coalition. All right. Now, with that, I will go ahead and wrap up my section of the presentation. And I do realize I did go over a little bit on my time. So what I'll go ahead and now do is I will introduce our guest speaker, our guest presenter from NAV. Gerri Detweiler is the head of market education for NAV. NAV is a really great option that a website that offers free credit reports, free credit monitoring, and also offers a great deal of tools and resources on it. So we're happy to have Gerri here to enlighten us on what small business owners need to know about business credit. How can small businesses grow their business credit to grow their business? Now, Gerri, feel free to take some time here, Gerri. I do realize that we might go over a few minutes, but I'm happy to hand this over, and I definitely don't want to cut you short on this on your presentation. So, Gerri, go ahead and take it away.
Thank you. Thank you so much, and thank you for the opportunity. We're really pleased to be part of this program and the information that Small Business Majority is bringing to entrepreneurs. So I'm going to talk about how to build business credit to grow your business. We're just going to be running my slides, so you can go ahead and advance to the next slide. I just wanted to share with you my contact information there. If you do decide to check out NAV, I have a favor to ask you. Go to nav.com and put in SBM. That way we know you're part of the Small Business Majority webinar. We know that they directed you to check out what we're offering. If you have a question about credit, whether it's business or personal as it relates to your efforts to grow your business, you can email me at webinars@nav.com. I know sometimes credit is a little personal, or you may feel a little, you may not want to share it with the group in the question section that we're going to have in a few minutes. So feel free to reach out to me directly if you have a question that we can't answer for the group. But certainly if it's something that everyone would benefit from, please hold on and make sure you answer that before our webinar is over. All right, go ahead, Rhea. So NAV was founded, one of our co-founders started his first business at age 22. It was a sign manufacturing company in rural Idaho, and he didn't know anything about credit. He avoided credit. His dad taught him credit and debt was bad, and he was trying to bid on a big job. It was a car dealership, and it was going to be a really good job for his business. He knew he could do a great job. He knew he had the best price. He didn't get the bid. He didn't get the job. And so he bugged them. They wouldn't tell him why he didn't get it. They kept bugging them, going back and asking again and again. Finally, someone got tired of him asking and pulled him aside and showed him the competitor's bid that won. And it wasn't a better price, but what the competitor had done is they had attached the business credit report of Levi's business. Levi King is our co-founder. They had attached his business credit report to the bid, their bid, and it wasn't bad. There was no negative information, but there was no business credit. So essentially they were saying, you know, you're going to take a chance on this kid who hasn't even built business credit and let them take on this big job? And as a result, he lost that job. But over time, he learned about credit. He accessed credit over 30 times, and he founded NAV with his co-founder with the goal of reducing the death rate of small business, because what Rhea mentioned is very, very real, that access to capital can sink a small business, and we don't want any small business that could survive and thrive with access to capital to die because they couldn't get the capital that they needed. So your business also has a credit score, just like you do personally. You can advance to the next slide. In fact, business credit scores are a mystery to many business owners. So just like Levi didn't know this, maybe it was perhaps, I don't know, 15, 18 years ago, we did a survey with Manta, and they found that 72% of small business owners today don't know their business credit scores. So I'm going to talk to you about why they're important and give you a few steps to build business credit so you can leverage that in your business. Go ahead. Now, the advantage of knowing your business credit score, I'm going to give you a few advantages in a moment, but one is that we found in a survey, this was a national survey of small business owners across the country, that those who understood their business credit were 41% more likely to be approved for a business loan. 41%. We think that's a competitive advantage, and we would like you to have that advantage. Okay, go forward. So how does your business credit come into play? Because some of you may be operating your business right now using personal credit, probably, maybe personal credit cards, maybe you've borrowed from friends and family, and you're not sure how this is going to benefit you to build business credit. Well, one of the main reasons that businesses want to build business credit is so they can move away from using their personal credit and use business credit, and in some cases avoid risky personal guarantees. So you establish a business, you establish business credit, and then you get credit in the name of the business instead of your own personal credit. This has a variety of advantages, one of which is keeping that debt off your personal credit reports, which can be very valuable. If any of you have credit cards that perhaps you've relied on heavily for your business, you might notice your credit scores go down when those balances go up. And you don't want that to jeopardize your ability to get the funding that you need. In addition, many small businesses rely on what's called trade credit or vendor credit. That's where you might have a supplier who will extend you terms. So let's say you have a restaurant and your seafood supplier will give you net 30 terms, or no, let's say net 15, probably something like net 15 on the seafood that you're buying. So you serve the food, you get paid by your customers, and then you pay them back out of your cash flow instead of having to borrow money. That's an example of the kind of credit that many small business owners rely upon. It also has a role in SBA and bank loans, which I'll talk about in just a moment. It can be used for your insurance rates. We have a NAV customer who owns an insurance agency, and he was having trouble getting errors and omissions insurance on his own insurance agency. And he found out it was because his company was being mixed up with another by a similar name in another state that had bad credit. And so their credit was affecting his business credit. Once he got it straightened out, he was able to get the insurance that he needed. You may need business credit for government contracts. You certainly are going to need a DUNS number, which I'll talk about. You may need a DMV Paydex score. Big companies like Walmart or Target, if you want to do business with those companies, they will check your business credit. It is a given. In fact, I was recently on a webinar with a CPA who said, yes, I used to run the credit checks in the supplier department at Walmart, and most of our suppliers didn't realize that we were going to check their business credit. So these are all important reasons for you to think about building business credit. Okay, let's go to the next slide. So where do these business credit reports come from? Well, it's a little more fragmented than it is with personal credit. So with your personal credit, you probably know that Experian, Equifax, and TransUnion are the main three companies that compile and sell personal credit reports. In the business world, you have Dun & Bradstreet, which is actually the oldest credit bureau in the country. They're only a commercial credit bureau, no personal credit. Experian has a division that it is business credit, separate from the personal credit, but they can produce a credit score that takes into account the business owner's credit plus the business credit of the business itself. So they do have a score that can blend those two. TransUnion is only personal. There's no commercial credit. Equifax also has a commercial credit division, and Equifax was the first credit bureau that worked with an agency called the Small Business Financial Exchange, which I'll point out on the next slide. And then when it comes to credit scores, those three-digit numbers that are used to evaluate you for risk, FICO has both business and personal credit scores, and I'll explain the business one in a moment, and VantageScore is strictly personal credit scores. All right, let's go to the next slide. In addition, there are some additional data sources. So the Small Business Financial Exchange, you will never get your credit report from them, but they are important because what happens is major lenders like bank lenders and some companies that do equipment leasing, it's considered a member database where if you share information, you can get information. And those reports, though, are sold through partners like Equifax or DMV. So if you are ever turned down for credit based on SBFE data, it would come through a partner like Equifax, and that's who you need to look at. There's also PayNet, which is largely equipment leasing. Infogroup is kind of interesting because Infogroup is the company that will call businesses to update their listings on search engines. So if you get a call about making sure your hours and your location on your when they search for your business in Google is correct, that's coming from Infogroup. So they compile a lot of information. LexisNexis is another provider. Let's go to the next slide. I want to touch on how to build business credit because I know that's probably the thing that's most interesting to you, but I do want to touch on something that Rhea mentioned earlier, which is that there's other data, especially in the business credit world, because the regulations that do not exist with business credit the way it does with personal credit. So there's a lot more that they're experimenting with. And one she mentioned is social data. And I was just at an industry conference where they were talking about how important this can be. So if you have a business that would have a Yelp page or it would have reviews on TripAdvisor or Facebook, take care of those. Respond to those. Try to make sure you have good ratings because those could come into effect with certain types of loan applications that you're making, and it's being scrutinized more and more. There's some lenders that even look at your shipping data, like if you have a UPS account, they can look at where you're shipping, how often you're shipping, the size of the box. All those things can be signals that can help them predict how likely you are to pay back lending. So your business reputation overall is really important when it comes to commercial and business credit. And you just may not realize that because it's something that's largely off our radar as business owners. All right, so let's go ahead and let's walk through some details. Now, a few differences between personal and business credit scores. The bureaus, the scores, and the reports. I mentioned the bureaus. I'm going to talk about the scores in a moment. There is no federal law that covers your business credit report. So with your personal credit, if you get a copy free once a year, right, from annualcreditreport.com. If you're turned down for credit based on your personal credit, you get a disclosure. It gives you the credit score. It tells you how to order your free report. Those are all things, if you dispute a mistake, it has to be investigated within 30 days. Those are all things that do not exist with business credit. So it is a little bit different. In addition, business credit reports are more likely to have errors. A Wall Street Journal study said that they have an error rate of about 25%. That's the only study I've seen, so it's a little hard to say exactly. But I will tell you that my theory, because I've been around credit education for more than 25 years now, I was actually worked on Capitol Hill when they first made personal credit reports free to consumers. And my theory is that the reason there are mistakes is because business owners aren't checking. Because ultimately, you and I are the only ones who can look at a report and say, yeah, that's me, or no, that's not me, or yeah, I was late, or no, I wasn't late, I need to get that corrected. So it's really imperative upon you to check these reports because anyone else can check them. Anyone can get your business credit report. It's not like your personal credit where they have to have a permissible purpose under federal law. Business credit, your competitor, a potential partner, someone you're thinking about doing business with, any of them can get your business credit report, and it's quite easy for them to do so. And payments count differently, which I'll talk about in a moment. All right, let's go forward. All right, so here's another difference. When you see your business credit report, this is something that I find always shocks business owners when they first see their business credit report and they figure there's something wrong here. They do not reveal the name of your lenders. So if you've seen your personal credit, it tells you have a Chase Visa or a mortgage from SunTrust. They don't tell you that on business credit reports. This is an industry-wide thing. They're afraid, I guess, that that other businesses could steal your business if they know who's lending to you. I don't know, but regardless, they will only tell you the type of account. So they will tell you it's a credit card or a bank card or a packaging vendor, but they will not tell you that. So you have to be a little bit of a detective with your business credit. Let's go to the next slide. Another major difference is the payment history is different. So if you've ever seen your personal credit, they have those grids where it'll tell you each month did you pay on time or were you late 30, 60, 90 days. It doesn't do that with business credit. So they break it into buckets and tell you what percentage of the time you were on time or late or very late. And the reason I'm pointing this out to you is because if you find a mistake here on this part of your report in the payment history, sometimes if you dispute it, they just remove the account. That may be okay if it's negative and you don't want it on there, but you may lose valuable payment history that you want. So sometimes it's helpful to go directly to the source, to the creditor that's reporting the information, and ask them to correct it. Okay, we can move forward. Another difference is they don't report credit limits on credit cards. So this is important because with personal and some business credit scores, they'll compare your credit limit to the amount that's outstanding, and if you're close to your limits, that's not good for your credit scores. But if there's no limit reported, what do? Well, they substitute it with the highest balance you've ever had on that account. So if you've barely used an account, it could look like you're almost maxed out, even though it's a relatively small amount. So this is a little tricky, but sometimes it can be helpful with your business credit. Let's say you get a new account with a supplier. You need to build up a credit history. You don't want to make a huge purchase right away. They might not let you right away because they might want to build up your credit history first. But when you can, maybe make a large purchase, something you would buy anyway, and then pay it off quickly. And that will sort of set this limit against which in the future they'll look at how much you're using of your available credit. So that's just another tricky thing to know about business credit. All right, let's go forward. All right, so what is a good business credit score? I don't think we have a polling function, and we've got the answers here anyway. So, well, the ranges are different with business credit. So the ranges for Experience IntelliScore is 0 to 100. 100 is the best score you can have. With Dun & Bradstreet Paydex, it's 0 to 100. Again, 100 is the best you can have. With the FICO SBSS, which is the business score that I'm going to talk about in a moment, the best score you can have is 300. So it's always important, no matter which score you're looking at, to understand what the range is, so when you see the number, you understand how it may fall into those ranges. Let's move forward. So with business credit scores, one thing I want to point out to you is that it is not unusual at all to see very different scores among the different bureaus. So with your personal credit, usually if you have good credit with one of the good score with one of the bureaus, it's probably going to be a good score with the other ones, unless something, like maybe a collection account shows up on one report and not on the other. With business credit, this is an actual example that we've just made anonymous from an app customer, and you can see how different these scores are. That's because they may collect different information. So you may have creditors who report to Experian but don't report to DMV or vice versa, and that could affect the scores. So it is important to understand that you want to check your various reports to see where you stand rather than just relying on one report. All right, let's go forward. So I want to point out a couple of things on the Experian telescore. This is a very popular commercial credit score, and just a couple of things I'm going to point out real quick. One is you see down here the payment trends. I'm going to talk about those in a few moments to talk about how payment history works with business credits, a little bit different. But you also see a tile that says company info, 17 years in business. Now, business credit bureaus are going to do two things. One is they're going to look at typically when your business was started. So that's when it was incorporated and the Secretary of State lists the incorporation date, or when you filed a business registration with your state. The date you started your business is important because we know that small businesses tend not to last. So if you have a business that's been around for 8 or 9 or 10 years, right there you're already less of a risk because you have experience. So that's helpful to know. The other thing they're going to look at is how long you've had a credit history. So a credit score can't be created without some credit data. And the more credit data there is for them to evaluate, the easier it is to create a credit score. So they're going to look at when was your first account opened and how long have you had it. That's true with personal credit as well. But with business credit, I just find that many business owners don't necessarily take the steps to start business credit. They don't know it exists, and so they may be in business for a few years and not have any business credit history. In fact, we recently did a survey of our customers who have added a business in their NAV account, and about 30% don't have a business credit history yet. So they really need to get some credit history started so they can start creating good credit and a good credit score. All right, next slide. And then on the DMV Paydex score, this score is really based on mostly trade credit references. So credit that you establish with vendors. You probably aren't going to see your business credit card showing up on your DMV account. You probably aren't going to see your business loan from your bank showing up here. It's usually trade credit. And you need 4 or 5 accounts in order to create a DMV Paydex score. So you really do need to do a little bit of legwork if your current vendors aren't already reporting to DMV to make sure that you have a score. The process with DMV is that you first get a DUNS number, a DUNS number, and this number is your identifier, like your Social Security number. You will need one if you're going to bid on a government contract. So it's something, it takes a little while. So even if you're thinking, oh, in the future I might want to do some government contracting, apply for your DUNS number early so that you have that and then you can start building this credit history. Another point real quick, UCC filings. If you're not familiar with UCC filings, that's where like some of these lenders that Rhea talked about, like especially the cash flow lenders, they might place what's called a UCC filing against all your assets. And essentially this is a notice to the world that we have first dibs if they don't pay. Now the problem we're seeing at NAV with some of the customers that come to us for help with financing is they have lenders who never released the UCC filing. They never let the public, the court know, oh, we don't have an interest anymore, they pay back that loan. So you need to make sure that once you've paid off a loan, if there was a UCC filing, that it's listed as satisfied so that it doesn't look like a current filing. Now I mentioned FICO small business scores. These scores are used primarily by banks. About 7,000 lenders around the country use them. And if you are going to try to get an SBA loan in the 7A program for $350,000 or less, your application will be screened with one of these scores. So they will actually do a pre-screen. If you don't have a sufficient score, which is 140, SBA says the minimum score required is 140, then you will be kicked out to manual underwriting. It just makes it that much more difficult. So it is an important credit score. It looks at your personal credit as an owner and the business credit of the business, and it uses those two to combine to create a credit score. So it's going to query a personal credit bureau and a commercial credit bureau and combine that information to create the score. As I mentioned, the high score is 300, and most SBA lenders in our experience are looking for 160 or above. You can get a passing score with really stellar personal credit and no business credit, but it's a lot easier if you have good business credit. It just makes it a lot easier if you have both. If both are strong, then you're in a really good position to get a passing score. And currently, the only place to check this score before you apply for a loan is through NAV. Otherwise, you go to a lender and apply for a loan and find out what it is then. All right, next slide. So DBT, I don't have a poll, so I can't ask you this question, but DBT refers to days beyond terms, and that's the way that payment history is recorded on business credit. So let's say you have a vendor who says you have net 30 terms. So your invoice is due 30 days after the invoice. If you pay on day 32, you're 2 DBT. If you have a vendor where it's net 60, if you pay on day 62, you're still 2 DBT. So it's really looking at what your agreement is with that vendor and how they report that. Now, unlike personal credit, where if you miss a credit card payment and let's say you make it a few days late, it's probably not going to show up on your personal credit because they go in 30-day buckets. Business credit does go by DBT. So if it's due on January 15th and you pay on January 17th, it's reported as 2 DBT. Now, the average DBT nationwide across all small businesses is, we'll go to the next slide, according to Experian, we'll advance here to the next slide. I'm not seeing the next slide, but it's, okay, there we go. It's 11. So if you miss one by a couple days, don't freak out, but keep in mind that if you pay on time, you're going to have a better business credit score. I mean, this is the most important factor in your Paydex score, for example. And to earn the top DMV Paydex score, you have to actually pay early. You have to pay before the due date. So if you want to be in that green 80 to 100 category, which is an excellent Paydex score, you need to pay before the bill is due. So just try to keep that in mind and make sure you set up systems. You're busy as a business owner. It's easy to miss a payment, but try not to because that can definitely affect your payment history. Let's go to the next slide. And by the way, they will often compare it to others in your industry, maybe others in your geographic area. So there's a lot of micro analysis that goes on with business credit reports. It's a little bit different than personal credit. So how do you build business credit? Well, the first, I recommend you establish a business entity. Can you build credit as a sole proprietor? Yes, but it's a lot harder because when you're a sole proprietor, you and the business are one. There is no separate legal entity. But if you're going to try as a sole proprietor, we can talk about that if there's interest. But you said whether it's an LLC, S Corp, C Corp, whatever you decide with the help of your advisors is the right business structure for you, establish that. Once you register with the Secretary of State, Department of Corporations in your state, that's when typically the credit bureau will pick up that information and recognize you in the credit file as a business, as a legitimate business. All right, next slide. Then the second thing you want to do is separate your business and personal finances. This is really important. We did a survey again with Manta earlier, late last year, and we found that about 20% of small business owners don't even have a separate business bank account. This is going to be really crucial for certain types of funding because remember, Rhea talked about fundings like cash flow and even bank loans. They want to see your business bank statement, or they're going to tap into your business bank statement. So if you have personal funds that you're using for your business, it's going to be a hassle at tax time, but it's also going to be a hassle if you try to get funding in the name of your business. I also recommend you consider a business credit card for business purchases. This is for keeping track of business purchases, and it also has some benefits for your credit as well. Next slide. All right, request a DUNS number. I mentioned that earlier. You can get that free through DMV. And then you need to establish credit references that report. So remember I mentioned earlier, you can't have a credit score without credit references that show up on your credit file. So you need to have companies that report to these credit bureaus. If you are having trouble finding them, we do offer a free tool called Business Launcher. We'll give you names of companies that report. A couple examples, Granger, Uline. These are companies where you could buy janitorial supplies for your business or shipping boxes or things that you need anyway. You get them on net 30 terms, pay them off early, and you're starting to establish business credit. And then again, paying on time is very crucial. All right, next slide. The other thing I want you to think about is protecting your credit. Identity theft is a serious problem for small businesses. In fact, it's growing because of different protections like your chip cards that you have now on your credit cards. These are turning to businesses because it's actually pretty easy to impersonate a business and to use that to get credit. Maybe they'll buy goods and then resell them, or they may actually get lines of credit and then use those lines of credit, and the business owner is none the wiser. So paying attention to your business credit and business credit reports is really important, just like it is with your personal credit. If you're a fraud victim, you want to know as quickly as possible so you can stop it, hopefully, and recover your business's good name. All right, next step, next slide. So at NAV, we do offer free business and personal credit scores and summary reports updated on a monthly basis. So this is a way for you to check and monitor your business credit as well as to monitor it for potential identity theft or other problems. If you do decide to check out NAV, this is a completely free service. You don't have to give us a credit card number, but please use nav.com/SBM so we know you were on the webinar. And let's move forward. Do we have another slide? I can't remember if we have.
I think that was the last.
Okay, we're almost done. All right, so I hope I've given you an overview of how it works. Again, happy to answer questions and serve as a resource if you have questions about your business credit.
Great. Fantastic. Thank you so much, Gerri. That was so informative, and I hope that everyone here on the line felt picks up on those tidbits of information, especially at the end there. And I certainly learned a lot in terms of just understanding where to get started, establishing your business credit and checking. The theory that you had that small business owners aren't checking their business credit, I certainly can. I certainly have business owners that have told me, where do I go to do that? Is there one place that I can go to do that? So this was super helpful. Now what we'll go ahead and do is we'll jump into the Q&A. It looks like there are just a couple of questions here. I will just kick it off. The number of questions here on the slide deck. So we will, again, be making the slide deck available. It will be emailed to your email address that you used to register for this webinar. It will be sent as an attachment on the right-hand side, and you can just go ahead and download that. And then there's a question here that I can take regarding interest rates of the alternative options that were discussed. So which of the options that you discussed have the lowest interest rates? That is a good question because as we talked about the alternative options, I started out with sort of more of the traditional alternative options like nonprofit lenders. I talked about the SBA loans, and then we usually also talk about community banks and credit unions. I will say that for those options, they do have very competitive rates. But what I didn't mention and what I think is worth touching on here is if you are eligible for a traditional bank loan. So if you walk into a Wells Fargo or Chase or Citibank, wherever you do your banking, if you are eligible for a bank loan there, the interest rates that you get at that bank will be your best bet. So if you do fill out that application, and that is one thing that I think is worth mentioning as well, start at your local bank. So start at where you do most of your banking. Talk to your banker. Establish that relationship. It's really important to note that the rates that you'll get at a traditional bank will be your best options out there. But with that being said, the alternatives that I mentioned before the online lending section, those are all very competitive. What you'll find with SBA loans, I believe it's the prime rate plus 1 or 2 points. So they are still fairly low with the options that I discussed. And then moving into the online lenders, it's important to note that those options are going to be more expensive. So online loans, what you do get with the speed of the delivery of the funds, you sort of sacrifice in terms of the price. So we have seen some of the alternative online lenders, some of the interest rates once they were calculated have been upwards of, we've seen 100% and above for some of these sort of cash advance options. But the lower end of the spectrum for online loans are with the online marketplace lenders, which was the first option that I mentioned. All right, and then a couple of questions here for Gerri. Gerri, can I build business credit even if I don't have personal credit?
Absolutely, yes. So some of the easier vendors like that I mentioned, Uline Granger, and we have a list of what we call sort of our Tier 1 vendors to get started with. Some of those don't even check personal credit. So you won't even provide a Social Security number. They aren't going to look at it. You may have to start small with them with small purchases, but as you build up a payment history and show that you pay on time, you'll get more and more credit with them. So it's absolutely possible, and it's as I mentioned, it's preferable to get started sooner rather than later because that gives you that credit history over time, which is so important for your credit scores.
Oh, all right. Looks like another question here to Gerri. So, can I build my business credit if I'm a sole proprietor? And then I'll actually also add this last question here. I'm looking to start my business in 6 months. What should I be doing now in terms of building personal and business credit while I don't already have a business established?
Oh, that's a great question. I like that last one because I've never heard it before, so I have to quick think about it. But in terms of building your credit as a sole proprietor, if you are going to try to go that route, make sure you at least get an EIN, an employer identification number for your business, and file whatever you need to file with your state to register your business. So you want to be on record with your business name at the state level because, again, that's where a lot of times they will pick that information up from. And then you can go ahead, after you've done that, then you can go ahead and open up a vendor account in the name of your business, one of the easy ones that I mentioned, so that you're starting to establish that business. And even if you have to use your home address, that's fine, but you want to be consistent so that the business has a consistent presence. Now, if you're looking 6 months out, then I would say that probably the best thing you can do right now until you're ready to launch your business. So if you want to go ahead and launch and register your name, but find your business name. Find a business name that isn't taken somewhere else, that you can get the URL for, that you can get the social media handles for, because you want to establish a name that will carry you through for your business. This is a big mistake that businesses make where they choose a name that's too similar to another business. I was at a conference where I looked up a business. It was a restaurant, and it was something like, I don't know, Asian Cafe. And there were literally 2 businesses by that name in a similar geographic area, but they weren't related. And so that would create confusion with the Business Credit Bureau. So finding a name that's going to work and you can register all those domain names and social media handles, everything else, is a really good first step because then when you launch your business, you have you've taken that and you've established it as yours, and then you can start to build credit in the name of that business.
Great. Fantastic. All right. Well, it looks like that was the last question, and so we'll go ahead and wrap up. I do realize that we did go over on time, but did not want to cut out all the great information that we were getting from Gerri. So with that, let's go ahead and wrap up. Again, thank you to Nav and to Gerri Detweiler, who was our guest speaker today, to talk all about business credit. We are looking forward to partnering continuously on future webinars. So stay tuned with us if you are interested in this topic. We will definitely have future webinars on this. And please reach out to us. As you're navigating through the funding options that we discussed, as you're doing your Google searches and figuring out what else is out there, and also as you're meeting with CDFIs and other local organizations that can help you. We at Small Business Majority are here to help you navigate this sort of challenging space and try to make it less sort of daunting for you. I hope that this Access to Capital and Business Credit 101 was a good starting point as you continue to grow your business. So with that, we will go ahead and wrap up. Have a great rest of your day, and this will conclude our webinar. Thank you. Take care.